Good afternoon. Today is February 25th. This is Henry Forbes from First Class Options. And remember, I am not a financial expert or an options instructor, just an investor sharing my strategies. So I'm here again today just to share some strategies with you, see what I'm doing and why I'm doing it and what I'm thinking is going to happen today. We had some pretty good things going on this morning. We missed one, but I think we caught some others, so I think it's all going to work out in the end. So let's jump right into that. So the first thing we did, we checked this morning. Uh, Market was up, and then of course, it starts coming back down, and it may go back up this evening. But we were looking at some options to see if we want to get out of any. Again, we're always looking for that 50% mark. So one of the ones we looked at getting out of was MU. And you can see here, as I put my cursor on the candle, uh, it was at a high of $43.99. That was a good time to get out. However, we didn't, and we waited, and now it's going down. Right now, it's about $42.90. So we actually put a call ticket in to get out of that. You can see it here. It's still in. Push modify. So we were willing to get out at 0.23, which is $23. It's going down, so that probably won't happen. So we missed that window of opportunity, but I still believe that Mu is still going to go back up before the expiration date. So I'm not really worried. Uh, I believe it'll rebound and go back up, and we'll be able to get out and make our 50% profit on that trade. That's why you want to get out when you can, because you never know when those stocks are gonna dip on you. Also, what we did, you can see here, we got out of Caterpillar. Um, Caterpillar was going up pretty good, so we thought we'd get out of that. Let's look at it and show you what we did there. As you can see here, we got in Caterpillar on the 19th of February, and we got out today. So when we got out, it was on its way up. And if you come down and look now, actually it is starting to kind of go back down a little bit. So let's look at what we did with Caterpillar. Let's come over here to our sheet, and we'll find Caterpillar here. Oops, let's do this right. Caterpillar. So we got in on the 19th. We got out today. So we were in the trade for 6 days. Let's go across and see what happened. So our max profit on this was $74. And of course our 50% mark was 37. We got out today making a profit of $46. $46 for 6 days is not a bad haul. I'll take that every day, but it's not going to happen every day. But we got out of that with a good profit today, with only being in that trade for 6 days. Not a bad thing. So actually, we're only, if you look at here, the average days in trade, we're in about 15 days of trade. We're getting out of them about 15 days in, so we're not even taking them, most of them, to 20 or 30 days. So we're out of those pretty quickly, taking our profits and getting into something else. Okay, let's go back over here to our trades, and that was Caterpillar. And the other thing we were looking at is TME, and let's pull up that chart. It is headed up. At one point we were going to get out. As you see here, it opened up at $18.48. The high was $18.55. It went down. Now it's going right back up as I thought. It's at $18.50. So it might be a pretty good time to get out, maybe not. Let's take a look and see what exactly we're doing here. Let's hit the close. So about $12 here to get out. Let's see what our whole profit. So we're talking about $18 for time to get out of there. Let's see. Let's go back and let's take a look at TMI and see where we are. So we're here. So we're talking about $18. So $22 is our 50% max. So we're under that. So that's a pretty good deal. And again, I think it'll go even better. Not sure. Let's see. I think we're gonna, you know what? We're gonna take this. We're gonna take this and run. And if we like, we may jump back in. Let's see if it'll take it for us. So we're gonna try to get out of that right now. Hopefully, we'll see a thing pop up and say that trade is closed. If not, we'll just hold it right there. Okay, that's the other thing we were looking at. The other thing that we did, we jumped into a option today. We got into stamps.com, and you see here we got into it today. We got into a put. We sold a put for $90, and we bought a put for $85. So what made us get into this one, the strategy that we use, they had their earnings here. After their earnings came out, the stock dropped substantially. Now it's recuperating and is coming back. But the other thing we look at, if you look up here, if you can see my cursor, is the volatility, highest volatility for a 52-week period is 301. And if you look over here, the current is 301, which is high, which is going to give us our best chance to make money on selling the option premiums. So that was what we did. And what we did, we went into the options chain, and I'll show you here. We already done it, but you'll see how it works here. And I'll pull it up here. My computer is a little slow, so hang with me. So the red here shows that we sold this premium for $3.40. And we covered ourselves with buying this premium at 85 for $2.35. So that was our actual spread that we purchased. And I'm going to go back into the chart, and then I'm going to pull this up so we can see it. Let's look at the analysis. And if you can see right now, we have a 68% chance of this staying above our strike points. If you can see here, our max profit is 119. It's a little different than that actually, but I'll show you on the spreadsheet what it actually turns out to be. So we got a pretty good chance with them coming back. So let's take a look at the spreadsheet and see where that's at. So here we are here. We got stamps.com. We got into it today. It expires on the 22nd of March. So we got to go over here. So we sold our put. We sold it and we brought in $301.52. Then we bought a put for $185.52, which left us a maximum profit of $113. So our 50% mark is at $56.50. So we'll see how quick that stock rebounds. If it rebounds quickly, we'll get out and maybe get back in, but we want to definitely wait till it rebounds up to at least the 50% mark before we get out. So that's how that's looking. We're going to get out of that. And just a little note for tomorrow, we're going to be looking at Papa John's Pizza. Let's take a look at it right now, matter of fact. see. So Papa John's has right now, they're going down right now, but they have an earnings coming out tomorrow. And we want to see where they're at on that earnings report. And we're probably going to try to jump right in there and take a look and see, what their earnings report is and if it's going to drop the stock or if they're going to have good earnings. But you can see here as we come down that their earnings day is February 26th, and that'll be after the market. So we're going to be looking at their stock on the 27th, 28th, and see where they're at. And if we got some good volatility, which it is right now, you can see here that their high is 69, and they're currently at 64, which means we can get the best price on selling our option premium for their stock. And it may even be better tomorrow, depending on how the earnings come out. So be prepared for that. I'll keep you posted on that. And that basically is what we've done today. Again, this is Henry Forbes. Hope this helped everyone. And remember, investing can be profitable if you have a strategy.